Welcome to the Friday webinar here. Welcome. So what do we got here today? What do you guys think of the week so far of trading? Kind of describe the week. What do you think? Steady drift higher. Yeah, ho-hum, choppy, uneventful, choppy. Yeah. Most part, we haven't really done a whole lot. Again, we've been in for the last couple months. Basically, we've been in this range, and the range has been, again, somewhere around here, 30.10 to 32.30, somewhere around there. You can say a little bit higher, a little lower. And the VIX has been somewhere around 25 to 40. That's really been the range. It looked like we wanted to bust out of this range, the upper end, but we still haven't. And so that's where we're at. And that's with the SPX is actually at 32.23. So we're in the higher end of the price range. And VIX is gotten beaten up the last 3-4 days. VIX is at 26.12, and that's in the lower end of the range. And depending on the trade you had on this week would be determine if you made money. Trades that were like maybe 9 or 10 days duration, they did better this week. Calendars, because the volatility went down, didn't do so well. Not that you lost much, you just haven't made anything. I put some calendars on at the 32.20 strike, which is almost where we're at here. And they're the same price Wednesday when I put them on today. And that's unusual. Does it happen much? No. Did it happen this week? Yes. Why did it happen this week? Because the VIX dropped 3-4 points, and that's why. But those things happen. So again, with going into next week, again, next week is another earnings week. I think the big stock next week is Amazon. Is that correct? Next week should be the big stock that will be, at least for next week, that will be reporting earnings will be Amazon. Agree? I think so. But again, with us in the low end of the range for income trades or relatively non-directional, I will look at long Vega type trades. I'll look at two trades that I would be interested in. One is actually a short Vega trade. Doesn't really get affected too bad on volatility if the price goes down. All right, so I'm going to show you two trades today that, and again, I would be looking to do Monday. I don't think at 106 Central today I would put on much going over the weekend, or very small. I'm not a big putting stuff on Friday, but as I look into next week, if we're down at these volatility levels and SPX is at the levels they're at, a couple trades I would be looking at Monday, or small today, but Monday, let's take a look. So first trade would be, I'm going to show you here's an example of a butterfly that actually doesn't get hurt if we open up down 30 points tomorrow and the volatility goes up. This trade will be fine. It's a certain type of butterfly. It's a balanced butterfly. I wouldn't mind. So here's an example of one. We'll cover two trades today, a butterfly and a calendar. So we're at 32.22, so I'm going to sell the 32.25 strike. I'm doing August 7, so I'm 21 days out. And so I will go 31.75 and 32. Let me just set it up. Here's the trade. I'm buying one, August 7, 21 days out, 31.75 call. And I'm going to sell two, August 7, 32.25s at the money. And I'm going to buy one August 7, 32.75. So this would be a balanced butterfly. The distance between my longs and my shorts are 50. The cost of this is going for around, to make it, you can see the live price is moving around quite a bit. Let's call it $650 for math purposes. It's about $650 for one. And the Greeks, I'm just short 1.5 deltas. I have positive theta because my shorts are going to decay quicker than my longs. And now this says if the volatility of each of my three options goes down a point, the Vega says I would make $24. If each of the three options, the volatility goes up a point, I would lose $24. Now, the question is why, if we go down, open down 30 points, Monday and volatility goes up a point or two, I really won't get hurt, because this type of trade, a balanced butterfly, because I'm a little bit short deltas, I'll be fine if we go down 30 points. So balanced butterflies do much better than unbalanced butterflies in a low vol environment if we go down and the volatility goes up. So when we're in the upper end of the price range, which we are now, and volatility is a little bit lower, for a short-term trade, I will do this balanced butterfly in SPX. I wouldn't go with the volatilities this low. I mean, historically, these volatilities are high, but the volatilities are low over the last 3-4 months. I wouldn't do any butterflies like 45 days out. But so this is about a 21-day balanced fly. And this is what I'll be looking at Monday morning. And you can see it does, this is the graph today, and this is the graph in 21 days. So a little bit of short deltas helps me on the downside. And again, I'm only 1.5 delta short, so not a big deal. But I like that trade. And that's going for $6.50 debit in SPX. And again, for these type of income trades, range bound stuff, you like a range, right? And we've had a range. So on the downside, if we go down near the, these would be your expiration break evens, where the expiration graph crosses zero. If you look at that, those points are about 3180, about, you got 45 points up or down. Now, if we go even 45, 50 points down Monday or Tuesday, we're not going to get hurt on this trade because we started out balanced and a little bit short delta. On the upside, I can't wait till the upside break even to do something. I probably got to come 5 or 10 points before that. Someone said, reset your parameters. Why does it look off? Let me just see. Anyways, but that's an idea of the for butterfly. Any questions on that? Kevin says, is it worth putting on a calendar, for example, today for the weekend theta? Small size, but probably not, because again, we're making an assumption, right? If we put it on today, the weekend theta, let me ask you a question. Do the market makers in the pit, did anybody ever teach the market makers in the pit about weekend theta? Did anybody ever teach the market makers in the pit? In other words, are you geniuses the only ones who know about weekend theta? Do those market makers know about weekend theta? I'm joking. Are they aware of that? Yeah, so I was one of those bozos. So what did we do on Friday morning and Thursday afternoon when I knew Rich and Seth and Gerald and Eric and Scott were going to come in and sell options? Just like any business owner, when I knew all you guys were coming in because you wanted to sneak away that theta from us, what did we do to make your welcome better? We lowered the volatilities. Lowering the volatilities, well, really what traders in the pit, what we would do is just run it on Monday's date. So we would take most of the theta out, right? But the retail trader, in his heart, he believed he was doing the right thing, but we were taking out most of that theta, right? So, you know, if you wanted to avoid that when the market makers lower the stuff on you, maybe put it on Wednesday or Thursday morning. But the point is, some of that theta is discounted already. Now, the next thing is, if we put a calendar on to get the theta, 2 days off in this world environment, could Monday morning be a rocky morning, one way or the other? Could we open up or down 40 points? The answer is yes. So you're weighing this risk over the weekend. You're weighing this risk over the weekend with, you're really not getting as much theta as you wanted. Now, here's the thing. When I was kind of a market maker as a specialist, but did we control anything did we control the volatilities? The answer is no. Who controls the volatility in the prices of options? Demand and supply, demand and supply. So we just moved it around, right? We just moved it around. Like if Shammy has a hot dog place in California and every day the place is packed and there's more buyers and they're just buying up these hot dogs. Don't you think his wife at dinner might say, look at Shammy, there's so much demand for these hot dogs. You're trading them for $2. Why don't you raise the price to $2.20 or $2? You know, in other words, that's all we were doing as market makers, because think about it. If I lowered the volatilities too much, let's say Friday morning, I knew Carrie and David and Eric the Red and Shammy were going to come in and sell calls, and I lower the volatility. If I lowered it too much, do you think there's any good institutional market make? Do you think there's any people out there in the world at Goldman Sachs that understand volatility? And do you think they'd come in, if I lowered the volatilities too much, they'd come in and buy thousands of these things? I just want to at least draw a picture of what it's like in the pits, that we couldn't just arbitrarily, you know, the market makers with very limited capital, I'm going to control the volatilities. No. Goldman Sachs has a lot more money than any 1,000 traders, or whatever. It is demand and supply, but I think it's important you understand theta, right? They're not just giving away checks on the weekend. And one way, some people that have had calendar trades on the last 3 days, they may say, Dan, they didn't give me my theta. Well, it's not they didn't give you your theta, the volatilities came down. And that's what hurt your calendar trade, right? Anyways, so let's look at a calendar trade. Here's what I want to tell you about: July 31, August 3rd. And this is one that I've got on right now. I could tell you a little bit about it, but I think one I actually did a little more today. Let's see, July 31, August 3rd. July 31, and let's just go, we're starting to move up a little bit, SPX, okay. But let's just say, where are we at the money, 32.25. This is one I got on, 32.20, which has been at the money most of the day. Now we're just up a little bit at 32.27, but it's by 1 August 3, and this is what I would look at next week also, 32.20, sell 1 July 31, 32.20, it's going for like 350. And what's interesting enough is we're right around, we're at 32.28. We're not far from 350 or from 32.20, and 8 points away from my strike of 32.20 on a $3,200 vehicle is nothing. So I paid $350 for this calendar on Wednesday, and it's still at stinking $350, right? And I bought some more today. So you say, this position says I should be making 20 bucks a theta or whatever a day, which generally this type of trade, a 14 or 15 day calendar where there's 3 days between the long and the short, I'm out of it in 2 days, 50% of the time with a profit. But today, they're not giving me a penny of it. So why am I not getting my theta? The answer is, if you look at the volatility of the long and the short, the volatility of my long option right now is 19. Volatility of my long option is 19.99. My short option is 20.53. Wednesday, so when your long option is a 19.99 now, my short option is 20.53. That's called a positive skew. The volatility, this calendar, which when I put it on was a 16-day calendar, now it's 14 days. There's a positive skew of 54 cents. In other words, the one I'm selling is 20.53. The one I'm buying is 19.99. There's 54-cent positive skew. And you say, well, I think that's good. Skews aren't good or bad. They're just, usually in an upward market, you get more negative skews. But let me just tell you what it was Wednesday. Basically, this was around 24 point, let's just call it 24.5. And this was around, let's call it 20. No, let's do this. Your long was 24.6 and your short was your long was 24, your short was 24.6. The bottom line is you have basically the same positive skew, but the vols are 4 points lower. So I'd rather have a positive skew when the vols are on the low end of the range or lower. And you could see the skew is about the same, the positive skew. It's just the vols are a lot lower. And so, it's been a challenging week for calendars. Not that we really lost much money, but too much, but more, they really haven't worked. And that's just because volatility goes down. So is it normal VIX to go down 3 or 4 points in 3 days? No, it just doesn't happen that much. But, that's part of trading, right? You take the good, the bad, and the ugly. So those are a couple trades I'm looking at Monday or Tuesday. We'll go from there. Next Friday, I'll be introducing a new online class. We're just finishing our calendar boot camp, which has been a good class. And then I'll talk about our new class we'll be introducing next Friday. So unless you have any questions, have a wonderful weekend. And thank you, Eric. And we will see you guys next week. Thanks so much.